yesterday, we saw pretty muted activity come through on the local bourse, and that's despite some macroeconomic data filtering through in terms of inflation numbers. Inflation rising 12.6% and surprising many to the upside.
Yeah, thanks, Alishia. Yeah, we saw the NBS release the data for inflation yesterday, and we saw inflation moving from 10.3% to 12.6%. However, this didn't quite reflect in the activities of the capital market because the investors were already expecting an increase in the inflation rate for last month.
Taking a look at that inflation number, though, I mean, moving forward, what kind of risk are you pricing in with regards to the Nigerian economy? Because this is something that would affect company earnings and profits moving forward.
There's going to be some challenges for a few companies that are unable to pass across the increases in their prices to consumers. Having said that, a number of the favored companies or the companies we are watching on the market, they are able to pass across the increases to their customers. Most of the companies in the FMCG sector, they are able to pass across these increases to their customers because demand for some of their goods are fairly inelastic. So at the end of the day, we are not expecting large variances in their performances as a result of the elevated inflation figures.
In fact, it's that fast-moving consumer goods sector that you've still got exposure to as a house over at Stanbic IBTC. Run us through the kind of investment case that the sector is putting on the table right now.
If you have companies like PZ, you have companies even in the brewery sector like Nigerian breweries. These are companies that are still investing massively in their operations. I mean, we are aware Heineken acquired a number of breweries in Nigeria to expand their operations in Nigeria, and these are sectors that no matter how much you're able to produce, given the huge population of Nigeria, there is still a huge demand for their products. So Nigerian breweries, for example, is not likely to suffer a major decline or even a decline at all in their performances as a result of the increases, because they are still trying to drive the demand for their goods because the market exists and their own challenge is to increase their production capacity, which they are doing right now.
Let's hone in on PZ Cussons. You alluded to it a little earlier on, and we saw second quarter numbers come through yesterday and pretty mixed numbers that were reflected. Sales up 13% year on year, but that offset by a fall in both profit before tax and profit after tax as a result of rising material costs. What did you make of those numbers that surfaced yesterday, Akeem?
Okay, PZ actually, I mean, like you rightly quoted, they had increases in their turnover, but they had a few challenges in their operations, and that led to the increase they had in their operational costs. Yes, they were immediately impacted by the increases in the fuel prices, but you must recall that the numbers they released yesterday was not reflective of the 50% increase in fuel prices in January. Is as a result of the increased diesel costs, which they're still using to power a number of their production facilities in Nigeria. Now, that has been elevated for quite a while, and they're still battling with being able to pass that cost across to consumers. But from what they've told us, they're likely to pass across the cost to consumers, and their earnings should be stable moving forward.
So where we've got that margin compression coming through in the first quarter and second quarter, you're saying that input prices should be stabilizing moving forward, and that the company is finding more scope to actually pass those rising costs onto the consumer down the line.
That's the expectation, yes.
Are you a buyer in PZ Cussons right now? What's the appeal looking at the stock and where it's trading right now, specifically from a valuation perspective, Akeem?
Well, we think the company still has a good future ahead of it. Right now, it's a hold on our grid, but we think, I mean, it still has very good potentials. And depending on what their final year results will look like, we may revise our view on the stock.
Okay, so that's some of the exposure you've got within the fast-moving consumer goods category of the market. Let's move over to the banking sector, because within that arena, it's still the big banks that you've got your eye on. And yesterday, it was specifically UBA that stood in the spotlight during the session. It saw a 4.8% rally on its share price and closing demand in excess of 41 million units. Many traders out there saying could lead to a further price rally today.
Yes, we have to look at UBA, I mean, in isolation. I mean, because UBA, in the last few weeks, they gave us a profit warning.
Yeah.
So the bad news had been sent to the market, and the price tanked as a result of that. But you also have to realize that this bank is one of the largest banks in Nigeria with a huge value. So investors have realized that, hey, wait a minute, yes, we've dumped this stock, but there's still a huge value if this bank actually recovers from the lost position. We had the managing director of the bank address investors yesterday on the floor of the Nigerian Stock Exchange, and he was able to reassure them, yes, they're going to have a bad year, or they had a bad year in 2011, but going forward, they've put in place some strategies that should make sure that that should ensure that they return to profitability. So investors are holding him to his words, and they're having this confidence in the bank again, or trying to ensure that what they promise they will release will actually be reflected when we see their first quarter numbers. But investors are still watching out, but they really believe that UBA has good value in itself, but they've somewhat missed the line in the last few years.
Yep, so something moving forward that we've got to keep an eye on. In the meantime, within the petroleum marketing sector, we had Owando rallying 4.9% as well, so very close to that 5% maximum allowed on the movement on a Nigerian counter on any given day. Run us through some of what's fueling that momentum behind Owando right now, Akeem.
Owando is the only local indigenous, company that's fully integrated. It's operating in the downstream and the midstream in the upstream sectors of the Nigerian oil industry. And in the last few weeks, they've announced the coming into an existence of their third rig. So the expectation is that Owando is going to generate a lot more income from their upstream activities. We also need to realize that they just recently concluded their Eastern Horizon gas pipeline lane in the eastern part of Nigeria to Unisem. That is part of things that's going to ensure that they have continuous stable income in the next few years. Yes, the downstream sector might still be stretched because the income there is capped, but they've expanded into the upstream sector, and investors are actually looking forward to getting good returns from some of these rigs that have gone into operations, some of these gas projects that they've concluded that's going to give them annuity income in the foreseeable future. So investors are trying to get into this stock and take advantage of the future potentials of Owando.